Gautam Shah is our market master today, founder and chief strategist at Goldilocks Premium Research. Gautam, good morning. It's relentless. I mean, just the hits keep on coming. What's your sense, Gautam? Where do we find ourselves at? Around 24,100 price-wise, but how much more in your opinion?
Good morning, Prashant. I think we must have seen a sort of a mini bear market in the last 1 month, because if you go by the headline indices, the cut has actually not been very large. But then if you look at the entire NSE, you have an average decline of anywhere between 25 to 30%. And as we speak today, the markets are very oversold, not just on the technical indicators, but even on the breadth studies. I do believe that the market has got into a base building process once again. And I think the key question a lot of people are asking is whether this is a correction within a larger bull trend or whether this is a trend reversal that leads to a series of lower tops and lower bottoms. I definitely believe in the former. I think this is a very nice, healthy correction within the larger uptrend. The market is a lot more fitter. The market is a lot more stronger internally. And I don't see deep cuts coming in from current levels. However, we are wired to believe that the markets will turn around and start making new highs quickly. That's not happening. So there is a big change. I think the Nifty is going to be stable. It's going to be in a sort of a range. 23,800, 24,000 area is a very important support. I don't see that breaking down easily. In fact, I'm more tempted to believe that the market will break out above 24,500 and gradually move to levels of 25,000 to 25,300. So I would be constructive from here. I think I know there is a lot of fear in the system, but the charts which were very, very overbought at the starting of October are quite oversold in the month of as we start November. So I think this is a buying opportunity.
In the event, Gautam, hi, morning, if the 24,000 mark on the Nifty, which is an important support, breaks, what happens then?
I think the market will have a lot of support on the downside. As I said, on an overall basis, the market is very oversold. Just to share a statistic, in the recent past, you had only 18% of the stocks in the NSE 500 that were trading above the 50-day moving average. And in the last 3 years, whenever we've tested such numbers, the markets have always bottomed out. So while you might see this volatility and it might look a little confusing, I'm still tempted to believe that 23,800 to 24,000 as a support is likely to work. In case it does not, I think then 23,300 is clearly the line in the sand, because that happens to be the high around the election result day. And mind you, I think you are in an environment wherein global markets are come back, US markets are at lifetime high, oil seems to have cooled off, VIX I think is in normal territory. The domestic money remains strong. India's fundamentals haven't really changed. It's just that all those stocks and sectors which were extremely overbought and overheated at starting of October have all cooled off. So the reality check has happened. The men have been separated from the boys. And I think we will build on a new trend on the way up going forward.
Okay, all right. Got that. Hi, Gautam. Good morning. You're sounding far more optimistic, it seems. So tell us about crude. That's been the big positive for us, because we have crude oil prices that are very well behaved. What's the range out there?
Yeah, I think, Nigel, last time when we spoke early October, I think our view was very clear that the market is headed for 24,000. We got that. I think it surprised a lot of people, but clearly the writing was on the wall. And now the studies continue to suggest that, global factors will ensure that our markets are protected. I know crude is in a sort of a band. $65, $67 on NYMEX has been a support for the last 8 months. Whenever crude has gone down to those levels, we've seen a rebound. I don't think we are going to see a breakdown below 65. I think there are more chances of a breakout on the upside, triggering a move to, say, a level of 85, 87. But I don't think it's going to be a factor that is going to impact equity markets. I think what the US markets have done, particularly in the last 2 days, the Fed stance, the US presidential election results, I think all of these factors are actually positive for Indian markets. So don't go by the screen today. Internally, the market is a lot more stronger.
No, I mean, the market is stronger, even looking a little better. Since we started this, Gautam, we're down 20 points, not 120. So there is already a 100-point recovery, which has come through. So, yeah, I mean, 24,170 or so is where now we're trading at, which is good. It'll be nice if you're able to hold around that 24,200 levels by the time we shut shop for today. But this is, of course, just the first few minutes of trading. Gautam, talk to us about some ideas, positional ideas from here.
Well, I do believe that financial services is probably one of the best opportunities and ideas for the next 1 year. I think in a month of October, while the indices, headline indices, and the many of the sectors of the market corrected big, notice what the Bank Nifty and the Financial Services Index has done. It was absolutely range bound. I think it absorbed supply really well. Despite a 10% fall on the Nifty, you have seen what SBI has done. You have seen what ICICI and HDFC Bank have done. So I'm very constructive on financial services and Bank Nifty as a pocket. And I feel that this is the index that is possibly going to trigger the breakout on the upside above 52,500. And if that is going to happen, then you will have Bank Nifty testing lifetime highs pretty soon. So I would be very bullish on the financial services as a basket. I think on an overall basis, they should do well. So that I think is a very good risk reward idea. So whether you look at valuations, whether you look at charts, I think it's all very well placed. Barring that, I think IT is something where we are again very positive upon. Last 2 days, we saw a lovely move on the IT index, and I do see that index appreciating about 10 to 12% from here. So all the large cap IT stocks, I think, are very well placed. Followed by metals, which has been my old favorite. It's seen a bit of a comeback in the last 3 or 4 days, and I do see the metals index going back to 10,500. So, some of the older favorites of the market like defense, real estate, capital goods, PSU seems to be taking a bit of a backseat, and newer sectors are coming to the forefront, and I think they're going to take the markets higher.
Okay, so you like banks, IT and metals. These are your preferred sectors to play the recovery in the markets from here on. What about autos? And if you could break that up in terms of passenger vehicles, CVs, two-wheelers, what are the charts telling you?
Well, I have the same view as last time. I think we would be negative on the auto index just because it saw a phenomenal rally in the last 2.5 years. Please note, many of these sectors have moved up 2-3x, in the last 18 months, and they need a longish period of consolidation before they can start doing well once again. I mean, you must have seen what some of the top auto stocks have done, led by Tata Motors on the way down. So I think they are in consolidation mode, along with capital goods, and I think it's going to remain this way. However, the basket which I think can potentially make a comeback is the PSU basket. I think we've had nice 6 months of consolidation, and select PSU names in the power space and the banking space, I think could be potential large winners over the next 6 to 12 months.
Okay, very quickly, Gautam, before we let you go, the two pillars of the Nifty, Reliance Industries and HDFC Bank. Reliance has been underperforming of late, but it's trying to form some sort of a bottom. The adjusted rate, I think 1250, it bounced up there. And HDFC Bank is showing signs that now it wants to be the leader of this party. What are the levels on both these two?
Well, you can't get better news if HDFC Bank wants to be the leader of the party, given the fact that it's always led us down in the difficult period. And I do believe that over the next 1 year, you will see HDFC Bank gradually inching towards a level of 2000. So we remain positive, and the way HDFC Bank has behaved in the recent correction, I think is great news for all of us, because it just tells you that the Indian markets are in safe hands. And I think it's made a very strong base in that 1650, 1700 area. On the other hand, Reliance is a big underperformer, and I don't think the underperformance is going away anytime soon. So it will put pressure on the market going forward. But HDFC Bank and the entire IT pack, I think, will keep the market safe.
Okay, all right. Gautam, always good speaking to you. Thanks a lot for joining in. Wishing you a good Friday ahead, and we look forward to chat up with you rather soon.